Hello guys, welcome to a Lumley trading live stream. Everything should be working. Let me know if it's not. We have the release coming out in about 5 minutes from now, so it's 1:55 Eastern Standard Time. Sorry as well if the screen looks kind of a bit stretched. For this, when I'm recording, so I have an ultra wide monitor. When I'm recording, I just turn it to like a 1080p screen. But for this, I kind of need all the screen space, so you're gonna have to cope with that. Let me just quickly send the stream into the Discord, and then we'll get ready to basically be watching and trading this FOMC release. So there we go. Let me just grab that and throw that into the Discord. As well, if you want any stocks analyzed after the release, we can go through some as well if you want. That's not going to be the main priority, so check that after. Okay, so just send that out. Okay, cool, there we go. So, okay, yeah, FOMC going to be released in about 4 minutes from now. We'll go through. So we've got Discord and we've got a TweetDeck open ready to get the kind of news as it comes out. Now, this one may not be a massive release. Normally, we get quite big moves on these FOMC releases, but we need to realize we still got the debt ceiling problem. And we had one of the Fed members come out today to talk about it. Again, it was kind of just throwing blame, as we're kind of seeing with this, between the political parties. And because that's still going to be the main focus of the overall market, we may not see a massive move on this release. But if there is, again, there's one key trading opportunity I look for. And again, if you're in the live stream, you're going to be able to see it because I haven't actually posted this anywhere before. But what it is we're watching the SPX options. As soon as that 2 p.m. candle comes out, wherever that open is, that is the strike we trade. So what we will do is we'll go to the 0 day to expiration options. We'll actually have to switch those the other way around because we need SPX options there. And so what we would do, for example, if it's a 115 strike, we would just pull that up. And all we do is we pull in a call and a put on these two charts here. And basically all we're watching for is a 50% decline in price on one of those two options. And whatever one comes first, we tend to just hit into that trade. Reason for that is a lot of the times these, well, they tend to be reversals, there's a lot of chop. So if you get the big news, usually it happens within about the first 15 minutes of the release, you'll see the option come down on one of the sides. And then usually you can look to obviously kind of just scalp out of that. Usually you can get in and out probably within 5 minutes. And a lot of times there's about 100% plus gains on the table. So that's usually my main focus on the release. Let me just actually add the VWAP onto here because I think it's quite handy to have the VWAP. And obviously today has been a very weak day, and it's been quite annoying actually because one of the key FOMC strategies we do on the day, I think we've only had about 2 fails on it in the past kind of 2-3 years. And it's really just when you see the strikes, so on this one, when you see the strikes become about below $5 on the day, pre-release, and most of the times you'll kind of pop above that level. And again, that's usually what we look for this trade plan. Today we can see we got to pop to that $5 again, and then just kind of faded slowly out. So again, we're holding actually still one contract in here from $5. So again, we're down about $375 or about $300 on that contract. We've looked in some profits on some other trades. So what we'll be watching for on this one as well is if this move can pop up to kind of that $5 range, again, we will potentially look to jump out on that other contract. And actually, we can make sure we got the trade. It would be on the cash account. And yeah, we kind of just got an order there to get out relatively quickly. But again, that's not our main focus. We're not actually taking the trades on here. You can see we do have Tastyworks open. We will be trading this through Tastyworks because that's really where I've moved to trading through the options. Okay, we have about 50 seconds now till the release. So again, we've got the different news sources opened up. So if anything happens, we should, as the news is released, we should be able to read it and grab it quite quickly. And again, it's usually not a rush to trade this. The strategy very rarely hits in the kind of first minute or two, so it's not something I've had to rush, throw the strikes on, and then get really quick to kind of execute them. Again, we can be a bit more kind of relaxed. It doesn't happen instantly. Okay, we got about 15 seconds to the release. Again, FOMC meeting minutes, 10 seconds to release. So we can start seeing how this reacts. Again, the initial thing, going to want to get those strikes on as soon as possible. So we're going to have to leave the chart as soon as the release comes out. Where's the 2 p.m. candle open? Okay. For some reason, okay, there we go. We got the 2:15 strikes. Let's throw them on. So we're looking, we can throw that on, and then again we can just throw that same thing on the other side. We just throw the tool. And again, yeah, what we look for on this is, again, where does the strike open? Opened at about 550. So what this really means is I'm looking to get an entry on these around kind of that 275 area. So that's my thing I'm paying attention to the downside. And then on the puts, if the puts end up executing first, then again, looking for that same thing. We're putting down 50%, and we'll be looking at around a 430 entry to the downside. So we now have those out. What we'll do is we'll kind of plot both of those alerts out. There we go. And then if those hit, obviously we'll look to trade them. So again, this is what we mean by you kind of get that seesaw effect at the beginning. You can see release came out, we popped to the upside, instantly faded that move. So if you're trading the futures, can usually be a relatively easy trade, but again, you do need to have risk on the table. Okay, Fed minutes. Some participants noticed concerns that the federal debt limit may not be raised in a timely manner, threatening significant financial systems distributions, tighter financial conditionings. Participants agreed that inflation was unacceptably high, and we are slowly declining, and declining slower than expected. Judged that the banking sector stress would likely weigh on economic activity, but to an uncertain extent. Focused on need to retain opportunity after May meeting. Generally agreed that the extent to which further interest rate hikes may be appropriate had become less certain. So those are the key headlines that have come through thus far. Again, we're still kind of getting that seesaw reaction. Again, we can even see the options haven't even moved massively yet. I wouldn't mind actually quickly checking out what's happening with those ones as well. Popped up to about 240, but not a massive move. So we wanted to go back to the 115s. So again, it's usually, it'll be when, because obviously it's a big document that comes out, so again, the big reactions can sometimes take a while to actually start happening. Several participants said if the economy evolved along the lines of their outlooks, further policy firming may not be needed. And then we also have Fed staff continue to forecast mild recession starting later this year, followed by a modestly paced recovery. Okay, some participants stressed it was crucial that the statement. Okay, that doesn't make sense how that's come out. Some participants stressed it was crucial that policy that was statement, not signal. The signal likelihood of rate cuts this year will rule out further hikes. And then we have some participants commended that additional policy firming would be likely warranted at future meetings. Starting to break through the VWAP on the SPY. So we are looking at what the 415s as strikes. Right now it looks like the calls are going to be the main focus. So I'm just going to open up those ready to trade on Tastyworks. But again, it's not any more headlines. No. Okay, now we've actually got the release as an actual document. Okay, now we're getting that big move again. That usually happens when you get the big move usually once the release comes out officially, like where we as individuals can now read it. So now we're getting that big move. Now this is the algorithms most likely just kind of interpreting everything in here. So again, this is usually where you get that big reaction. That's why we usually say it's about a 5 to 15 minute wait until that trade opportunity actually comes into play. The ideal way this move will hopefully work is that the puts push down to the 275 before the calls, because again we're still holding that one call from earlier. So ideally we get in with that put, because then at least we offset those risks. But again, it's still a different strategy as a whole. So even if it comes down to the 430 on the calls first, we'll still be looking to take that trade. There we go. We're just fading that out again. Again, it's kind of one of those things. It's too long for as kind of like an individual to read through this in one go. It's one of those things you kind of got to watch after the market, or read through after the market, or kind of just get those key highlights, because that's too many pages. Take forever. Nothing new though, or nothing else has yet come through. Just having a look. Okay, we're actually getting some stuff over here. Fed minutes official show officials split on support for more hikes. Fed officials stress data dependent approach, cuts unlikely. So again, this was one of the big talks, was people were believing we may be getting cuts, but now there's been more unlikely, which again, if cuts are more unlikely, usually going to be stronger for the dollar, worse for the stock indexes. We're getting some more news coming through now. Officials saw timely debt limit as essential. Obviously, that's quite self-explanatory. Extent of potential hike had become less certain. So again, going to be strong for the dollar, not so strong for the indexes. It's probably why in that initial release, as it became public, we're getting now that spike down. Almost all officials saw upside risk to the inflation outlook. Most Fed officials saw rising downside growth risk on credit. And Fed staff maintained forecast for mild recession in 2023. So again, they still think we're going to get that recession. They do believe it's going to be mild, but I mean, I guess we will see. Participants at Fed's May second to third meeting generally agreed extent to which further interest rate hikes may be appropriate had become less certain. So again, kind of the same things. Many participants focused on the need to retain opportunity after May meeting. Several participants said if economy evolved along the lines of their outlooks, further policy firming might not be needed. You got the dollar and the yen moves closer to that 50% midpoint range since the 2022 high. Fed minutes, so many participants focus on the need to retain. Okay, we've already had that. That's come out twice for some reason. Again, we're still not moving too much on this release. Like we said before the release came out, again, the main focus is going to be on that debt ceiling. So it may just be a pretty lackluster move. I mean, we'll probably be able to see by about quarter past. If we haven't really had, I'd say probably even like a 10-point move on the SPX by about quarter past, it's probably just going to be a pretty lackluster and kind of dead release. But again, we'll have to wait and see how this starts to react. But again, we will read any highlights as they come through. They seem to already be saying. I said I don't think there'll be too much in this. We're getting none over there. No new ones over here from what we've read. Again, I think the main focus is all going to be on the debt ceiling. So unless there's anything would have been found by now, if there was anything to do with debt ceiling, that's always going to be that main focus. Anything else, people don't really care too much about, or at least it's not going to be enough to move the market all that significantly, because again, everyone's waiting for that June 1st, and the problem is as well, we've got that long weekend. Monday, markets are closed. It is a national holiday, so again, it can delay that debt ceiling, which again is going to make it all that bit more serious. Starting to break down now, a bit to the downside. We've seen the 4115 calls coming that bit further down there, about 600 now. Again, we're looking to get long on those about 430 if we can come down to that level. We could as well, again, as the algorithms read more into this release and see what happens, this the and we can actually pull up real quick where the S&P futures are. The VWAP should be pretty similar though, but that could be one of the key focuses we've already snapped below it on the S&P futures. Now it's kind of all eyes on the S&P. Again, algorithms still do trigger on VWAP, even if this is a big release like the FOMC. So if we start kind of properly closing below it on the SPY, probably a good sign we are going to continue down. And again, if we do get that push down to the lows of the day, wouldn't be unlikely. Okay, we may actually leave the futures up instead of the SPX, even though I trade the SPX. The SPX basically moves the same as SPY, but I do want to be seeing the VWAP on this release. So again, we may go over then to the S&P futures. Solid move. Oh, well, actually, seems like the VWAP's actually been trading a bit nicer on the S&P. Oh, sorry, on the S&P futures compared to the SPY. Again, it's just watching how we react now. No new headlines have yet come through. And again, especially tonight and going into tomorrow, beware of a lot of volatility, especially if you've got swings open, because don't forget we do have big names reporting after the after market close today. Key one gonna be Nvidia, so don't forget that, because again that is going to be a big move. Options are pricing in, okay, but our calls are coming down to a potential entry, because the Nvidia options are pricing in about a 7% move on this release. Okay, we're snapping below. Might be one of those things. Okay, might place the order at around 350. Might look for that for an entry again. I'm kind of just watching, is there going to be a snap or is it just going to be a steady downtrend? So we place the order out. You got it somewhere where we can easily manage it though if we need to, cancel it or adjust. Again, the actual entry should be around 430. Considering the slower move today, I kind of want to be a bit more patient on that entry. And again, we do already have one of the calls open from earlier. So again, we don't want to be getting in kind of too early on the new contracts. What is quite weird as well though is the calls are kind of moving a lot slower in comparison. I mean, sorry, the puts are up around right now about 20%, but yeah, again, like we said, the calls are now down about 50%. So quite a big difference in price. Could have been one of those things if you were potentially playing straddles out of this, locking in profits on the calls and turning it into a directional could be a good idea coming into the current prices. Starting to get that bit of a bounce now. Again, we might be getting that retest of the VWAP, so I didn't want to enter in right away. Just because, again, we do have to retest that. Don't think we're in anything yet. We're not in anything else, so we should be good. Again, ideally, the puts can come down. The puts is really what I want to see come down, because then obviously the calls are going to spike. Even if we don't get into this trade, again, I want it to come lower, even though that's usually where we would get in. A lot of time, obviously, from testing, you see it goes offside by quite a bit. And again, we're already in that one call, so we don't want to be getting in this one too early, because if it continues down, we're taking loss then on both of them. So ideally, again, the puts can come down and we can trade it like that. Anything else coming through? Fed Waller sees a rate hike or skip in June, but no stop. Doesn't look like much else is coming out. Everything else seems kind of dead from here. And that's already old news, so I don't know why that's coming through again. There's no point rereading that. Here we're getting that retest of the VWAP. And if we were along the calls now, probably locking in a tiny bit of profits just to see how it reacts. Again, we can already see though the S&P futures VWAPs being a lot more respected, so I would be paying kind of a bit more attention to that one though. Again, if you're already in the money with those contracts are already up, we can have a quick check. They would already be up quite a significant amount though. Percentage wise, already up 35% in about 3 minutes. So yeah, it would make sense to be cutting out at least some side, maybe moving that stop to break even. Start seeing how the other ones are reacting. They're breaking down at these lows, I guess, because that is becoming less and less possible for those to actually expire in the money. Does make sense. Because we do have, if we quickly chop this back to the SPX. And again, we did say usually in the range of about 5 to 15 minutes is when you'll see the options down 50%. Was it 11 minutes in, by the way? So SPX, again, yeah, it still needs about a 20-point move just to get back to the open, essentially. So yeah, the likelihood of that isn't really significant. We're starting to see an actual ideal move. Again, now if we're breaking through and holding above the SPY VWAP, focus goes to the S&P Futures VWAP. That is going to be the difficult bit. We can see we've tested this 3 key points today. A fail each and every time. Okay, snapping back down. It's really struggling to hold that VWAP. Again, I think a lot of this is just down to international news as well. I mean, you had UK GDP, CPI come out today, went up once again, and I think it was a high or biggest increase in ever. I did post about it actually on the YouTube community page if you didn't already see it there. But I don't think we've ever seen this on the same day as an FOMC release. So again, that can be why we're maybe seeing a bit of a different move today in general. And again, we've also got big news of a debt ceiling to focus on. So what it was, let me just grab it up. Yeah, so UK inflation skyrockets up to 8.7% again. And then the core consumer price index, which excludes those wild swings in food, energy, and which actually is quite weird, is it also excludes tobacco. But I don't think that was I didn't include that in the post. And that has skyrocketed to a 6.8% again. So a 1.3% increase from the previous month alone, of which that's a bit that's the highest monthly jump we have ever seen in UK history. So again, even though obviously the US market's always going to be more significant than the UK counterpart, anything like that, if it comes out of the ECB, if it comes out of the UK, Bank of Canada, if anything quite significant news like that, obviously it's always going to have an effect over on other markets because most countries are likely to be in somewhat of a similar situation. So it's never a good sight if you see another country or another first world country in that kind of same predicament. Obviously, if you're seeing news coming out of Argentina, where inflation is always relatively high, obviously that's not going to have much impact because that's not much insight. Again, I think the main focus for now then is just how do we react to this VWAP. Really, it's all eyes on that. Basically, is can we start holding above it, or are we just going to really stay weak and hold below it? So what we might do is just move that over. Yeah, we're not even coming back for that retest on the S&P. Looks like we're breaking back as well down on the calls. What will actually open up as well, we will open up this zoom it. This is the thing I use in my videos, so you can kind of draw on the screen, but it may come in handy. But yeah, as we're dropping through here, again, it's kind of why I didn't want to get in right away. Yes, we got that bit of a pop. Actually, not even a bit, quite a significant move. Was about a move of about 50%, so definitely money to be made on those. Again, it was a relatively slow move to that downside. So again, I kind of just want to be a bit more patient on this move. And again, like we said, we're already holding the 4135 calls. So again, want to be a bit more risk managed in that sense. Don't want to be going too much heavy on the call side. when the overall market is showing as bearish. They've taken this FOMC stuff as bearish. We're not even able to hold it above it on the SPY. We're not even coming back to retest it on the S&P futures. So really, I'd want to see a bigger snap down if I'm looking at the calls now, probably down to the $3.50, $3. Might be one of the things as well. We might just kind of cut that loss on these. Need to change account just to kind of get out of this. There's no point really holding it, letting it expire worthless. That's well, that would be about a 420 loss on that contract if it fills at that 80. That is. We're pushing lows. Actually, we might as well just down this account. It doesn't really make any difference. Again, if we're taking new trades, it's all going to be on the Tastyworks account. This money as well didn't really matter too much. We're really kind of moving away from trading from Thinkorswim right now. What we're going to be trading on, so this was always a cash account, as you can see there. It's in cash. We have 2 cash and a margin. We're going to stay on Thinkorswim for the margin account because there's a new, well, relatively new strategy I want to start trading involving large cap gappers coming into their third deviations. So that will probably trade over on Thinkorswim. And then the cash account that we used to now trade on Thinkorswim, we're just moving over to Tastyworks. Just because they're, well, because the cash account we're using, we usually for scalps. And the Tastywork executions tend to be less laggy and a bit more responsive. So we'll probably watch this for just a few more minutes, and then again, there's not much point really sitting here till market close. The market has now taken this as bearish. We may get another big move kind of around half past, but after that, don't expect to see too much happening. We can see nothing else is really being released from it. We have bond traders are betting on June interest rate increase by the Fed, despite the persistent threat that lawmakers will make will fail to reach a debt limit deal. So again, we do have that. Looks like we might start cracking that low, the 11 or 211 low. If we start breaking that low, which looks like it's going to be the case, I think any hopes to the upside are probably going to be dead from that. Just seeing if we can see anything else. Doesn't really seem like anything else is coming out. No, nothing significant there. Nothing significant there. Yeah, everything else is kind of dead along the way. So I think, yeah, all the main headlines have kind of come out by now. Again, we'll watch it to probably about half past, but if nothing really happens on half past or by half past, again, probably not going to be too much happening after that. Probably just be a slow kind of trending day going into the rest of the day. Again, looks like we're getting a potential pop. If so, again, it will just be watching that VWAP. There's really all this is going to be is just watching this VWAP. As soon as we can kind of break above that on the SPY again, like we always talk about, whether we're doing analysis videos or watching the news, doesn't make any difference. We want to see a break above. Come back to test it as a support. If this holds, then what we want to see is a move to the upside, and then our focus goes to the S&P futures. That's going to be our target around 4130, which is going to be obviously our VWAP on the S&P futures. And if we can come to here again, we've tested this 3 times today. You can't see the alpha one right this second, but each time we come into here again, obviously just popped back down. So it's going to be how we react to that. That'll probably be the first instance. Probably unlikely that we just snap through. So again, watch for that pullback. Then it's all going to be down to, can we hold? Or if we go back to retest it, can we hold above that level? If so, we need to see that retest, hold that as a support, and then we got a good chance of continuation to the upside. But again, considering how the release has already been today, don't think that seems all that likely. Might be one of those things I can literally just cut out there and now. Again, that's a relatively big loss then on those. We lost about 450 on that one contract. We traded, I think we traded the SPYs today as well. We made about 50 on that, so about $400 loss and today on this release, which definitely isn't ideal. But that is trading. Starting to pop back above that level. Oh, we did actually have our upper limit at 350, but again, I don't like how this is trading. I don't think I'm going to get involved. Considering as well we're already down, I don't really want to add to that loss. Okay, looks like, again, the main focus is really if we start breaking this low, we're probably done for the day. Again, we will watch to half past. Sometimes at half past you tend to get a bit more of a reversal, but nothing happens by half past. Again, not much more to go through on this news. Again, anyone watching, if you have some stocks you want analysed, I mean, it's kind of slowed down now. We can quickly go through anything if you're interested in a stock to be analysed. I do actually want to keep an eye on it. Where did we open at 2 again? 116. Okay, actually those calls are actually we have to break through by quite a bit though. Oh, it looks like we've just broken that low. Yeah, that's why we kind of get that snap through as well. It's not a slow break. Again, what you'll probably see on this is you tend to get two big reactions when this happens. So you'll tend to get that retest, come back to kind of this 150, and then you just get that kind of smash to the downside. Or again, we just go back to kind of this choppy behavior and we just keep trading like that. If we see that reaction again in advance, we'll probably just stay out because then that's kind of just a steady trend. Yes, we can try and catch on in the options, but you can see on the puts, the trending direction, they're pretty lackluster. They're not moving all that much, whereas on the calls, the ones that are against the trend, or you know, you can see they're very sharp. So it doesn't always make that much sense to be trading the direction because it's kind of what the options are pricing in. Again, this is kind of one of the clearest ways to see it. You've not even broken the 411 high, or sorry, the 211 high, but on the calls, obviously we've gone through, we've smashed that low. So again, we'll give it about 3 more minutes, see if anything else happens. Again, you kind of got what it looks like then, what has happened. Like we said, kind of the first outcome is you kind of come back, you get that retest, you start to smash down. Again, watch for that break of that low. If we break below there, then that's near enough confirmed, and we'll probably smash down to around probably 410 by the close. Well, let me know if you guys want me to stream more of these key events. I usually do the CPI each month. Thinking of doing the FOMC and bank rates each month, or not each month, each 8 weeks they're released. Or sorry, about every 6 weeks they're released, because they tend to be the biggest movers. But if there's any other events you wouldn't mind or want to see watched, again, we can go through more. I think they're the biggest ones that most people want to see. So yeah, basically playing out as we kind of said. Again, got that retest. We're now smashing down. As soon as you break that low, more likely we'll push down all the way to that kind of 410 target from now. The reason 410 is a target, again, not for really any significant reason. More just, again, big psychological level. I guess it's a previous support there. Coming into that 52-week low. Oh, not 52-week low, intraday low. Again, we can kind of see where is our potential trend taking us. Again, I wouldn't trade this kind of technical on a news release. But again, we can see if we do get a potential bounce coming into that level. But it's one of those things, if we're holding it short, definitely locking in profits into that area would be sensible. Because again, we might kind of get that bounce off here. Even if you do come back to test that 450, we'll probably still continue down. But again, that's, 30 points, that area there. If you don't need to be in for it, there's not much point being in for it. Okay, cool. We're really seeing those calls get smashed. Those puts are now flying. Puts are up 100% from their lows. Again, we kind of got a small bounce off that level already. And instantly coming down. Again, the whole day is just weak in general, making that trend kind of more likely. Again, there's multiple ways to see it. Fundamental news is bad. The FOMC wasn't exactly good. We had a Fed speaker speak earlier today. Again, kind of just fighting with the other side, even though it was a speech by himself. All it was basically just being quite defensive and, again, blaming each other's parties. And again, not able to break the VWAP on the SPY. We're definitely not able to even break it on the SPY futures. So both the technicals and fundamentals are lining up. It's just very weak. So it's one of those things. I mean, we cut out of those calls. Again, it was only to save about a $50 loss. Doesn't make a massive amount. Well, more because it's probably going to go to zero. So if we can save $50, why not? Again, obviously there is always a chance it does bounce. It could go into the money, but you know, that's for kind of relying on a wish and hope. Okay, getting a bit of a bounce now on that level. Again, I wouldn't properly be trading off them. When we use these kind of levels, I don't like to so much trade off them. I would tend to use them as targets, because I don't think they're strong and significant enough to pay attention to put money on the line of taking it long. But you know, if you're already in good profit coming into these levels, doesn't hurt to trim some size into those levels, especially considering, you know, that's about a 17-cent move to kind of the key target for the day. You know, that would already be made in that potential loss setting. Even if you wanted to get some more size in, it could have been done. We're now getting the futures settling as well. Natural gas June futures settle at $2.39, well, 2,380. Natural gas futures settle at $2.3980. You also have the WTI crude futures settling at $74.34. And I don't think the other one's really going to matter. You got diesel and gasoline, but most people aren't focusing on them. Again, got that retest. So again, what you'll probably start to see here, you hit that level, you smash back down, and wow, we'll probably break that low. And yeah, already starting to play out. Oh, sorry. Can you make these? What's that? The chat's pretty small. Can you make decent profits from intraday or swing trading? Of course you can. I mean, you've got full-time traders at hedge funds, banks. They make their money. Most of them won't be day traders if you're institutional trading, but most of them will be making their money swing trading. Especially if you're more hedge funds, that would definitely be a bit more swing trading. And, you know, if you're working for a prop shop, if that's a Jane Street, or if it's a relatively more like a funding company, like an Apex, you know, the majority of those traders are going to be day trading or some potential swing trading. So you can definitely make money, otherwise no one would do it. But again, it's definitely not easy, it takes a lot of time. And one of the weird things with it is you need to be all right with being wrong firstly, because you're going to be wrong, you know, 40% of the time or 50% of the time, depending on your strategy. And you always you lose your own money. So again, you need to be someone who's not to say not emotionally attached to their money, but if you start losing money, it doesn't put you in a bad mood. Like today, again, we lost $440 today. You know, if that's a normal person, you know, that could be a week's of work or a few days of work, and you know that could really affect your kind of psychology and your mental. If you know you can't kind of deal with that kind of thing, then obviously you probably can't make money trading unless you learn how to manage it, because otherwise you'll just lead to revenge trading and you'll blow your accounts. That's always the hardest thing with trading. I think why the majority of people do end up failing is just kind of disattaching their emotions to their money. Okay, just more news on the future settled. White House says averting default is responsibility. Oh, it is the responsibility of every member of Congress. J.P. Morgan can sue former executive Stanley over Epstein ties, as said from a U.S. judge, reported by RTRS. And again, I think they're going to be all those key headlines. We'll probably call it quits here, just because there's not really much more to cover. Again, the news has been kind of weak. Again, we kind of said that before the release. Main focus is going to be all on the debt ceiling, and I do think markets will be kind of be a bit difficult to trade. So again, if you're trading technicals, you're trading news, I would be careful until June 1st, or until we have kind of an official statement on the debt ceiling being solved. So I hope you enjoyed the live stream. If you did, why not drop a like and subscribe? And again, we'll go live probably on the next key event. And if you want any videos recommendations, throw it on the comments and we'll get around to it. What did you say? What do you think about the US 100? Now, I never actually look at the 100, so I couldn't even tell you. I need to look for it. I see the NASDAQ 100. We'll see ticker for it, and then we can do a quick analysis of it before I call it a day then. Because again, I never look at that 100. Can't even see a ticker for it. I can only see NASDAQ. Oh, S&P 100 index. I'm guessing you're talking about the DEX. If not, quickly correct the ticker and OEX. If that's not the right ticker, update me and I'll quickly change it, because we need to open up something else real quick anyway. Oh, you just talking about the NASDAQ. Okay, cool. We'll go through the NASDAQ futures then. So the main focus, again, we'll just find the standard deviation charts. So this is a longer term perspective when we're looking at this chart. And so what I'd really be focusing on is firstly where the deviation's facing. Again, if you're not the best at determining which way a trend is, this is the easiest way. The 6 month, again, this left chart is a 6 month. We're trending up. This right chart is a 1 year. We're trending up. So obviously an uptrend from a yearly and a 6 month perspective. So as soon as you see that, looking kind of more obviously bullish. But then we need to be paying attention to what are key levels. So you can see we obviously started to pull back in this range. Why is that? So obviously we came into our first deviation on the 6 month. And again, these are key, especially on these the S&P 500, the NASDAQ, really any big index. Just because this is where funds, banks, institutions are looking. They have algorithms triggering at these levels, and that's why they tend to be very accurate, because this will be areas where they reposition. So you start to see a pullback in this level. Where do we expect to see that pullback run to? It'll be that next deviation. So in this case, that's going to be $13,400 and about $15. So again, we do expect to continue pullback to this level. What we want to see is a retest of this level as a support. And again, we can never say it's going to bounce from here, it's going to sink from here. So what it's always watching is we put out the levels, and then you have to kind of watch those yourself, and you'll see how they react. Because coming into this level, again, this is our support. So if we see this level hold and we start to get a bounce, then obviously this level's hold, we expect to continue move. We expect the move to break above that 1400 or 14,000. And then our target would go to around 14,200, because again, that would be our next deviational level, which should be the second deviation on the 1 year. Now, on the other hand, if we start breaking down, we don't hold this level. If we just break through, then again, to kind of confirm that downtrend, I always like to see a retest. But if you retest this 13,400 and that holds, then again, as soon as you kind of break that low, you expect that continued move down, and then we would expect a move really down to all the way down to around $13,190, because again, that is statistical mean. And what I would be saying is between that range of 13,200 and around 12,640, I would not be trading the NASDAQ, or I wouldn't be looking to swing it, because in this area, direction becomes unclear if you're at fair value, unless you're potentially investing. Again, it's kind of a gamble on which way we go from here. So again, I would be looking at it. So I think that should be a clear enough analysis. Again, for now, watching that pullback, more likely than not, we're going to come all the way down to 13,400. Then it's just seeing how we react to this level. If we start to bounce and hold, you're going to have really an overall target of around 14,200. If we don't hold this level, we break through, come back, test it as resistance and fail. Then again, 13,200 is going to be that target. Anything else? What do you think about the Fibonacci levels? I do think they're useful until they're not. Like sometimes you go through, I mean, we can, actually I'll just clear this, kind of make it clearer. I mean, a lot of times obviously you can go through them. You know, it will work a lot of the time. So even if we just go from this low, we kind of draw the fibs out. Or we'll do it on this previous move that happened. Obviously, we can see in this case, we tested the 38, we near enough tested the 50, we got our bounce. So it looks like it works, but it's how do you really trade it? And I think it's down to anything. Any indicator works. The VWAP works. The moving averages work as long as you have a way to trade them. So they're never something I really use all that often because I just don't have a strategy that goes with the fibs. But again, there's definitely ways to take trading opportunities. You can see, obviously, provided a bounce there, provided, you know, a bounce there, even provided shorts here. So there's definitely ways to trade it. But again, it's always going to be down to your own strategy, what you think of it. And like anything, you kind of just have to find your own strategy and how you can use these levels. One way, and I used to use them, I don't really use them anymore. And any time I ever really used fibs was if I already had a level. So let's say I already had a level at, say, 12,300, and I can see, okay, we got a fib level here at 12,370. I may consider that a range and say, okay, this is a range of support I'm then paying attention to. If we hold that, I will look to trade it. If we don't hold that, obviously, then it's not holding. I use market structure on daily and weekly and fibs for the entries. Yeah, so that's what I mean. If you've got a way to get them to work, then everything in the market will work as long as you have a way for it to work. Because even if it only has a 50% chance of working, again, you can easily make a strategy out of that. Or even if it has a 20% chance of working, you just pay the inverse, there's an opportunity. So yeah, I do think anything can be used. It's just always going to be down to personal preference and how you kind of find a way to use them. Anything else you wanted me to run through real quick before we go, or are you all good? If so, we'll call that a day, and we can have a quick look at what SPY's doing just before we go. Yeah, so we really started to bounce off that trend line, so that trend line did actually work quite nicely. And again, that's why we lock in those profits. No point being greedy for 7, or I think it was even less than that. Yeah, no point being greedy for the sake of 16 cents. Why don't I use TradingView? So, as you kind of saw here, when I like doing my analysis, I love to use these. I've been using these for about 2-3 years now. And these are basically one of my bread and butters for trading. Now, on Thinkorswim, they work perfectly. You can get them on TradingView, you can get them on Tastyworks, you can get them on NinjaTrader. But there's kind of a restriction to how they work. So on what happens on Thinkorswim is it just takes all the data on the chart you picked. What happens on brokers like Tastyworks or platforms like Tastyworks is you have to put in a certain bar. So you might have to say it goes back 250 bars. And for me, it just makes it a hassle to use them. So using them on here, it just makes the most sense for me. And the app this is Thinkorswim by TD Ameritrade. I think recently taken over by Charles Schwab. Now, TradingView, we can actually put it up. I do actually use it. I don't trade properly off of it. But what I do is, here we go, we'll pull it up. What I like to use, and we can kind of delete this. What I like to use on TradingView is the anchored VWAP, which is something something Thinkorswim currently lacks. Because what I like to do is on these key releases, bank rate releases. Normally, sorry, I'm choking. But on the bank rates, I like to use anchored VWAPs from those releases. Not something you can do on Thinkorswim. So I usually have an eye on the SPY from TradingView just to see where the levels, and again, you can kind of see them play out quite well today. You can delete this blue one, that's just a normal VWAP. We'll hide it. But again, these anchored VWAPs I really like. They tend to have quite a lot of success and definitely key supports to be paying attention to. You can see this is what's really holding today. And again, we haven't even been able to break on this on the FOMC. So I will use TradingView, but that's about the only thing I use it for. And I think TradingView is one of those things, if you kind of got a slow computer, it's a great platform. Whereas if you've got quite a powerful computer, I think something like Think or Swim can kind of just be a lot more fluid. But again, it's all down to personal preference. I just like that one indicator on TradingView. That's all I'll use it for. Think or Swim, I think, is a lot nicer and a platform I'm a lot more used to using. So again, that's why I use it. So is that everything? If so, again, we'll call it. If there's any other questions, again, I'm happy to answer anything else. Again, is actually I'm not going to be trading it now because it's coming too kind of close to the close. But we are now retesting that VWAP on the SPY again. If we can retest it on the S&P, that would be quite a key watch as well. It's typical. Obviously, we cut those calls. Actually, it didn't make any difference. Again, we cut out those calls about $55, $50. Again, that's why we kind of cut out. The likelihood of us now on the SPX getting back to basically where we opened, super low. So for the sake of $50, makes sense to kind of just lock in that money. On the actual 115 calls, again, we can see there is definitely some success on them, especially if we got them down more at the lows. But again, didn't want to trade that same direction because if it went against us, we would have basically just had two big losses on our hands. I would have only really traded it properly if we played it on the puts, because again, then they would have offset them and hedged each other out anyway. But I think that is going to be the end to the stream. We've been streaming for about or just under an hour. So again, hope you enjoyed it. If you did, why not drop a like and subscribe. Hope to see you next one. And that's it.